Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Wednesday, September the 15th. The year's 2021. Let's talk trading. Little by little, part 3 with Walmal. These videos are for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, good to have you back. I've been talking to the traders about making small incremental changes with their trading, and not worrying about the big things, but focus on the small things that are in their control, that they can the steps they can take, so little by little they can watch their accounts increase. So what's your take?
Yeah, I think that's a really good thing to talk about, and it's something that's very, very important. If I'll use a sports analogy at first. It's the type of thing. If somebody goes into into playing baseball, gets into a hitting slump, generally speaking, what the hitting coach will do is he'll go and look at that hitter, look at that batter, and start paying attention to what he's doing. And generally speaking, it's not one thing that went wrong. Well, maybe it started off with one thing going wrong, but it kind of escalates up, where they do one thing wrong and then they take some type of corrective measure, which causes another thing go wrong, and so on and so forth. The next thing you know, that batter is doing, not one thing wrong, but maybe multiple things, 5, 6, 7 things wrong. And so what does the hitting coach do with that batter? He sits there, and a lot of times he'll sit even at the high school level or secondary school for our friends who are overseas. They'll actually go and look at videotape, and the coach and the batter will sit there and watch. And what they'll do is, the first meeting, they'll go and say, hey, these are some of the things that you're doing wrong. You're doing this wrong, this wrong, this wrong, this wrong. And they'll name off 5, 6, 7 different things that he's doing wrong. But then what a good hitting coach does is he then sits down and says, let's go and let's try to go and correct this one thing. And that's what they'll do. They'll go and correct that one thing. So, for instance, if it's the type of thing where you just don't have your arms in the right position, he starts working with the hitter, just getting your hands in the right position. And he'll go and take them and put them out on the field, put them in the batter's box, and and actually literally stand next to him and say, okay, your elbow's dropped, your elbow's dropped. You need to have your elbow up. And he'll just go and do that over and over and over again until it becomes something that's just rote, something that's just muscle memory. And I think that's something that we need to do with trading as well. Every one of us, myself included, and I'm sure TRO, you can say the same thing. When things start going against us, it's not because we're doing one thing wrong, we're doing multiple things wrong. But the thing is, we can't fix multiple things at the same time. I just think that we as humans are just too frail to be able to go and fix too many things all at the same time. I'm sure there's some superhuman out there that can go and do it. And if that's you, well, congratulations, but that's not me. And I don't think that's you either, TRO.
Well, actually, you gave some sports analogy, but let's come back to trading. What's one thing that maybe you've had to fix over your trading career?
My biggest thing was fear, and the thing is that it was not, we talk about fear of missing out, that wasn't my fear. And I had a strange fear compared to probably some people. But my fear was fear of not being able to do this. And so that's kind of outside the realm of trading, but it's not. It was a personality flaw that I had to overcome. And once I went and recognized that, hey, not only is that an irrational fear, but but looking at the paper, I can see, hey, I can actually make money at this. But I had to go and constantly work on my personality and work on myself to get myself to the point where I didn't fear of not being able to do this. And I think it's, we're given this emotion of fear for a reason. And it's a good emotion because, let's face it, we don't jump off the Brooklyn Bridge, into the East River because of fear. So it is, something that can absolutely protect you. But when you have a fear that overcomes the ability for you to go and do what you need to do, then it's a bigger issue. In the psychology world, they say when you go through a very difficult time, that people who are born leaders, what they have the ability to do, and have the innate ability to do, is turn on what's called operational strategy or operational reaction. And what that is that, you're in a situation, it's a very high tense situation. You're able to go and set aside that fear, put that aside, and actually go and think and reflect back on what your training is. So, for instance, if you're a police officer or if you're a fireman, how does a fireman run into a building that's burning down? Well, there's fear there, but at the same time, they rely and jump back on their training, and they rely upon their training. What's our training? Well, our training is going and doing this on a regular basis, learning how to do it. And for me, anyway, my training, the most important part of my training is that I know that statistically I will win. It will bear out, and I have to go and rely upon that for myself.
Okay. Let's say maybe something, looking at a chart, what's something that a mistake a trader might be making that if they eliminate it might be the difference between, being in the red all the time versus being, in the black.
I think, the biggest mistake people make is they don't look at the charts. What I mean by that is they get myopic in their view. They're looking at the chart that they're trading off of. What's the first thing, and I know you've seen me do this, and I know you do this as well, but what is the first thing I do in the day? First thing I look is what's the range for the day? So when I got up and I started looking at the charts today, the range for the day was about 50 pips. I don't remember exactly, but it was only about 50 pips. But I said, I put that in perspective. Okay, perspective is that we've had a lot of very low days. Yeah, yesterday was a day that was over 100 pips on the pound dollar, but that's a very rarity. We had to go back 3-4 days before we had another day that was over 100. So 50 pips is actually almost at the range of the day. So now I've got that little nugget in my mind. So I think that's the biggest thing we need to do is just know where you're at. Know where you're at on the chart. It's sort of like, all y'all know that, I like going and doing the Walmal method, and I still do that. But the reality is, let's say we've got a range of 50 pips, and every day it's been, 40 to 50 pips, and we're at the top. I have to question whether or not I really want to take the chance of taking a long trade, if I'm at the top of the range, just because of what I've seen over the last week or two. Doesn't mean I'm not going to take the trade. It just means I need to be a little bit more careful. On the other hand, if it's now, let's say, it's only 50 pips, okay, or let's say it's 100 pips, okay, and we've had nothing but low days, and now we're sitting at the top, and I'm getting a sell signal, well, that's probably a whole lot more comfortable to take that trade. Some people may call that a bias. I call it just knowing where you're at. It's where are you on the chart? Where is price more likely to go to and run to? And yes, you still can go and just take with the Walmal trade, just take it at the 10 lines and just go in the direction of the trade. And that will absolutely win you pips. But where people get into trouble, I think, is that if you're trading into a headwind and you're up 1, 2, or 3 pips, you may want to say, you know what, I'm taking my pips off the table because we've run into a wall here so many times in the past. It's better to get 3 pips than no pips.
Exactly.
And so I think that's the biggest thing, for me. Yes, my Walmal method, 10-5-1. I say it all the time. But at the same time, 10-5-1 doesn't mean that I'm going to get 10 pips or even 5 pips. What it means is those are artificial goals that I put out there that I like to use as goalposts or goal lines that I like to go and try to attain. Doesn't mean that I'm up 4.2 and I'm not getting down until I get to 5.0. I'm not going to do it. That's crazy. That's nuts. No, and that's not the way to look at it. And it's more of if I am going to do that, let's say I'm up 8.9 pips, okay, I'm going to do the same thing. It's the type of thing where I'm not going to say I'm going to get 10 pips, so I'm getting nothing. No, that's part of the 10-5-1 thing. If I'm got up 8.9 and price starts to reverse on me and I hit 5 pips, I'm out. I'm taking my 5 pips off the table, and I'll go and look for some pips someplace else. So I just want to clarify the 10-5-1 thing because we haven't talked about 10-5-1 in probably months at this point.
Yeah, and one thing you said about making multiple errors, one of the things that I have to tell traders is that you can do everything right, but still take a loss. And that's something that you have to recognize, is that in
Absolutely.
trading, it's, maybe we're beating something into the ground, but I think we really need to beat it into the head of our fellow traders, that you can take a Walmal trade at the line and everything could look perfect, but you could take a loss because
Absolutely.
maybe it only goes up to 31. Like this hour is 31.4. If you would have taken, or this 5 minute chart, if you would have taken, gotten in right at 30, and you didn't take that 1.4 pips off the table, or maybe the one pip, and after your commission and spread, maybe it was almost a break even trade, basically a scratch trade, you'd be underwater. And you
Right.
did nothing wrong. And it's like, no, the method didn't fail you. You're not going to win every trade. So that could be one of the things that holds you back, is that you think you're going to win every trade.
Right, and the thing is, I was talking to a trader about a month or two ago, and he was having some difficulty with the Walmart method, and what he was doing was, the reason why he was getting himself into trouble was because he was trying to get that 10 pips every time, and you're not going to get the 10 pips every time. So knowing that, what you need to do is you got to mitigate your losses and just say, you know what, I'm not, and everybody's going to have a line drawn in the sand someplace and say, I am not going past this point. I am not willing to lose this many dollars or pips, or however you decide to delineate it, okay? And you just draw a line in the sand, and that's it. And hopefully you draw the line in the sand in an intelligent way. And what I mean by that is that you look at the chart, you look to the left. We say that all the time, look left. If I know that, hey, there's been a lot of activity, like right now, if you look at the chart on, if I go and look at the 5 minute chart, we know in that level somewhere between 25 or 26 down to, somewhere around, I don't know, 23, 24, there's been a lot of rejections that have occurred on that at that point, and it's the type of thing where if I cross that line, that means that, hey, it wasn't rejected this time. There's a good chance if I was going long that this is probably not my trade. I probably want to go and say I'm out at that point. So in that situation, I say, in my method, if you've gone up 3, then you go and you only allow a 3 pip loss. Okay, that's a good rule of thumb. If I haven't gone up 3 yet, I'm willing to go up to like a 7 or a 10 pip loss. But at the same time, you also got to be smart about it and mitigate and say, hey, wait a second. I've now broken through an area that is, been a support area for a long period of time, and it's caused issues in the past. You know what? Why am I going to go and let the trade go 7 pips against me when I can get out with maybe, -3 or -5? That's, to me, is just throwing money out the window. Could it turn around and go back the other way and actually give you profit? Sure. Has it done that for me? Sure. But at the same time, I think for me, the biggest thing was what I needed to correct in my trading is say, I'm willing to take a loss. And I guess, if you were asking me what my second biggest thing that I had to overcome was the willingness, as our youth say today, take an L. I have to be willing to take an L. I have to be willing to take a loss, because that's just part of trading. If I win 51% of the time and lose 49% of the time, and I've got the right money management in place, I'm very wealthy. Or for that matter, if I win 25% of the time and lose 75% of the time, but I've got the right money management in place, I can still do very, very well. It all comes down to how you have all those little pieces in place.
And you know what? The fastest 15 minutes in trading is up once again. So, fellow traders, I hope what Walmal passed on to you today is helpful. And so when you sit down at your trading platform, once again, little by little, make improvements, because it's not what you trade, it's how you trade it. So go out there, drain the banks, and hit the like button. And if you haven't, hit the subscribe button. This is the Rumpled One, over and out.